Hi traders, this is Glenn from Practical Pips. Thank you for watching this video. We are going to answer a question that we're getting asked a lot lately, and that is, when are we going to trade the Swissy pairs again? Are they still no-go zones? And if we're going to trade them, how are we going to trade them? So without going into too much detail about why you may be concerned about the Swissy pairs, I think this huge red candle on this chart is a bit of a giveaway. Let's give you an outline of how we look at these pairs at the moment and how we intend trading them. So I'm going to throw a fib level on here, and what you can see is after this big drop we've had about a 50% retracement. If we put the fib at sort of where the pair found support, we think at least a 61.8 retracement is quite likely. Now, how would you look at trading this? So typically you've got this very big move down, you have the retracement, you then wait for some sort of bearish confirmation at one of these levels and then sell back down to the sort of the zero level, or maybe the 23.6, somewhere around there. That's traditionally how you may look at doing it. Now, the interesting thing with a pair like this is the dollar has been very, very strong lately against pretty much all currencies. And obviously the Swissy has now demonstrated a lot of strength recently as well. So if you were to take a sell on this pair, you would effectively be selling the dollar and buying the Swissy. Now, the buying the Swissy part is fine, but it's a selling the dollar part that has us a little bit concerned. So instead of looking at a pair like that, why not look at the Swiss yen? A lot more interesting here. So the Japanese central bank, the Bank of Japan, is trying its utmost to devalue its currency. So what you would expect on a chart like this is for price to go up, which is exactly the direction that we want. So we have two currencies. We have the Swissy, which is going from strength to strength, and we have the yen, which in turn is weakening. So instead of two currencies competing against each other on a fundamental scale, we have two currencies that are going to work with us on a trade. So when I throw the fib level on this graph, what I can see here is price has retraced to the 50 level, and definitely does look like it's going to make it down to 61. It does look like, yeah, the 61 corresponds nicely to some resistance that we've seen before. So this would definitely be a better trade and one that we'd be looking for. Again, we'd expect price to drop down to the 61.8 level, some sort of bearish signal, some sort of bullish signal at that price, where we'd look to jump on, and then potentially trade up to the 23.6 fib level. I mean, that's 900 pips, and you could probably even go further. You could probably go all the way up to 1,400 odd pips. So it could definitely be a great trade in the making, where the fundamentals and the technicals are working in your favor. That's all for now. Thanks for watching this video, and we will update you later. Bye for now.